Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at three of the commodity currency pairs. So it's 3-in-1 in this video. I'm going to start with the Aussie versus US dollar. Let's get started. Late yesterday, I did a similar video taking a look at these three major currency pairs. And what we noticed in that video was the move to the downside here, the move to the upside here. So the question was, could we get above this swing high right here, push to the upside, or do we move further to the downside again? In this case, well, for the Asian session voted to the downside to start off with, and they moved down to this area right through here, which was near the swing high that we saw right through here. I had to earmark this level as a level to get to and through. Also, it was nearer the 100-hour moving average. That's a blue line in the chart. We needed to get below the 100-hour moving average to increase the bearish bias. It didn't. We instead found support buyers near this level, and we started to rotate back to the upside. We had the US data today, which pushed the price breaking to the upside, getting above the high price out for the week and extending up to a 0.6938 level up through here. So the question now comes, what next? Well, we are breaking above these highs right through here, so that's bullish off. And if the Aussie versus US dollar is going to go higher, you'd want to see the break hold. That is, the price not move below that level and start to rotate down through here. So that would be a disappointment for buyers, and I would expect that if we start to break below, let's say the 69 level, that sellers would start to come in, the buyers would give up. Now, the other question is, where are we in relation to the daily chart? Is there anything ahead? And if we look at the what we did in trading here today and what we did this week was we broke out on that chart as well. We moved above these highs right through here, where we had well, actually 4 different swing highs through here that came in around the 0.6894 to 0.69 level. So that is another key break here in the Aussie versus US dollar, so we wouldn't want a price to move back below those levels. Now, what about the upside? Well, as long as the price can remain above this area right through here, as long as the price can remain even better, remain above the high prices that we saw in the trading this week, which was above the 69 level. But here is that swing area with the daily chart. So really, we can say that stay above this level right here, and everything is bullish for this pair. So as long as the price can remain above that level, then you just say, well, then we have room to roam to the upside. And there isn't a lot. We go back to this period in 2023. There isn't a lot of resistance until we start to get up toward the 70 level on the top side. So, the door is open for further upside momentum in the Aussie versus US dollar. Let's take a look at the New Zealand versus US dollar. We'll focus on the hourly chart as well. And what we see in this currency pair was that the up here. Like the Aussie versus US dollar, we retraced yesterday. It didn't retrace as much as the Aussie versus US dollar. Remember, the Aussie went all the way up to the high price that we saw the previous day. Here we come up, short of that, certainly. We rotated back to the downside. We came down to a similar support area. That similar support area was defined by, this high right here, going back to, that's August, end of August, let's say. Also near the 100-hour moving average, and found support buyers, and we started to move higher. We had the data come out this morning, and that pushed the price even higher, and we are breaking to new highs above the 0.6354 level. That was a high price for the week. So as long as the price can remain above that level, that's more bullish. Let's go to the daily chart to see where we are in that. And in this case, for the New Zealand versus US dollar, we're kind of entering or leading into a key resistance area. That resistance target comes against the high price that we saw here in November, December of end of December. That is 2023. The level came in at 0.6368 level. We are trading to a new high for the year, but we have this end of December high at this level that we need to get to and through. Moreover, we have this swing area between 0.6363 to 0.6389 to get to and through. So as long as the price can continue this momentum, stay above the previous high, for instance, and continue to march into the swing area and then get above that level, that would be more bullish for this pair. Alternatively, we could see sellers come in against this level. Why? Because risk can be defined and limited against it. As long as the price remains below 0.6389 level, we have a potential for a rotation to the downside. But the buyers are certainly more in control, and we'll see if they can keep that control in the New Zealand versus US dollar, so be aware of that. Finally, let's take a look at the dollar versus Canada. And we saw the dollar versus Canada. Let's go to the daily chart first. We saw the dollar versus Canada this week moved down to this low area right through here, which was the high of a swing area where we had different low here, different low right here, different months, and we came right down to the high of that swing area and found support buyers that pushed the price to the upside. So successfully holding up support, leading to a retracement to the upside. Now, what has the hourly chart done? And what we saw on the hourly chart that we came up to this swing area through here. We had a number of different swing lows and swing highs and found resistant sellers against it. We came down to a support level down here where we had these two lows going back in time, and we did move below it in trading yesterday, but we could not sustain the momentum on either of these breaks, and so we started to rotate back to the upside. We did get above this swing area through here at 134.86 level. We also moved above the 100-hour moving average, which should have sent the price higher, but then we had the data come out and we pushed down lower and we're back down testing this low. So what I'm looking at here is a similar pattern where the price is below 134.86, above 134.65. If we get above the 86 level, we need momentum to take this price to the 38.2% retracement, at least of this move to the downside. If we can't get above that 38.2% retracement, then are the buyers winning? No. Alternatively, if we see sellers against this 86 level, we need to get below the 100-hour moving average, and then we need to get below the 134.65 level to increase the bearish bias and have traders looking down toward this low right here and this low right here at the 134.39 and 134.189 level. So there's my look at three of the commodity currency pairs as we head toward the weekend. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.